This is Terrence Andre Banks with Information Age Financial Solutions, coming to you again talking about an article about stocks and the Dow Jones reaching 25,000. Actually, this article comes from CNBC. It's not one of the places I usually utilize to get information because of just when you're dealing with the regular broadcast media, they tend to skew it to one side. So in this particular, and they don't provide as much information, everything always usually looks on the more rosy side. But CNBC's done an article, and the title alone stuck out to me. Investors should be terrified about the exponential risks associated with the Dow 25,000, analyst says. Again, that title stuck out to me. And what could go wrong with actually a Dow going over 25,000? And I'm going to dive in and get right to the article itself. It's definitely worth your time to look into, especially as the stock market continues to go higher and higher without, it doesn't seem like it's any reasons of sun slowing down. Despite the Dow's rise above 25,000, MBMG's Paul Gamble says concerted worldwide growth was seen during previous financial crises, and therefore the current risk to investors is exponential. President Trump has touted that markets surged throughout his presidency, unlike his predecessors. Since its inauguration on January 20th, Trump has tweeted about the stock market more than 50 times. Now, prior to the president getting in, he said it was in a bubble. But, you know, as all politicians, they change their mind once they're getting in and it's not unlikely for you to hear that they are going to take, especially if the economy is going up and the Dow continues to go up, they're going to take credit for it. Wall Street's eye-popping gains should be of great concern to global investors, an analyst told CNBC on Friday. The Dow Jones Industrial broke above 25,000 on Thursday for the first time, following the release of stronger than expected jobs data. I always don't like another reason why when you're listening to the regular aspects of pointing for the media, and they always say that the job market is the lowest it's been, but it's never taken into consideration the participant rate of individuals actually who've given up on jobs. Just a side note there, it was the fastest 1,000-point gain to a round number in Dow's history. A 30 stock index broke above 24,000 November 30th, 23 trading days earlier. It took the Dow 24 trading days to go from 20,000 to 21,000 last year. We were really terrified, Paul Gamble's managing partner at MBMG Group told CNBC. And this gets where it gets interesting. When asked why, he believed traders should avoid investing in stocks given the Goldilocks global growth conditions, Gamble said. In the first three versions of the Goldilocks story, Goldilocks actually died horribly, and we think that could well happen again to stocks. Gamble said that the collective global at the level seen through 2007 was a GDP equivalent to a blow-off top. He added that similar levels of concerted worldwide growth were seen during previous financial crises, and therefore the current risk to investors is exponential. I want to repeat that again. Gamble said that the collective global growth at the level seen through 2017 was the GDP equivalent to a blow-off top. Blow-off top means, stock term when it's used for technical analysis, when a blow-off top means the market is going to correct. He added that similar levels of concerted worldwide growth were seen during previous financial crises. We've seen this before. That's what he's getting at. And therefore, the current risk to investors is exponential. The exponential factor is one that really can't be measured. That's what really stuck out to me. The Dow gained 152 points on Thursday to 25,075, while the broader S&P 500 tech-heavy NASDAQ also hit milestones. Earlier Thursday, ADP and Moody's Analytics reported the U.S. private sector added 250,000 jobs in December, well above the expected 190,000. In 2017, prices were supported by a rebound in global economic growth and renewed investor optimism that looming corporate tax cuts will result in bigger dividends and share buybacks. A low interest rate environment was also believed to make stocks a relatively attractive investment. President Donald Trump sought to take credit for his new record break rise above 25,000 on Thursday. He told reporters, "I guess our new number is 30,000. There were those that said we wouldn't even break 25,000 by the end of the 8th year of my administration, and we're in the 11th month." Trump has touted the market surge through his presidency, unlike his predecessors. Since his inauguration on January 20th, Trump has tweeted about the stock market more than 50 times. On Thursday, he tweeted, "Dow just crashes through 25,000. Congrats, big cuts and unnecessary regulations continuing." That very well can be, but I'm going to take heed to what the gentleman who from MBMG stated, that we've seen this before, and when here's a blow-off top, and if you look at the Dow Industrial Jones analysts from looking at a chart here, and it doesn't show it here. It just shows a hockey stick, and nothing can continue going up without a vacuum of no correction. Even Bitcoin and the Litecoins themselves, that's actually where the actions are, because they go up and they crash just as fast, and they continue, it moves with some kind of, quite dips, but the Dow is just continuously going up. With all the problems that I've talked about in previous videos, this is just giving more to the fact that we need to be mindful of what's going to happen and what's going to correct this year. And I'll just play what he's talking. I'll give you a little excerpt from what he's played, a little video they have here. Hopefully it goes to what he's mentioning.
Gopi's found a way to keep her receipts tidy.
Well, they got a little advertisement will play out, so. Well, it's not giving a good job here because it's going too slow. So what I'm going to suggest is just take a look at the article itself, listen to what he actually has to say, and be mindful. 2018 may be the biggest year of change that we've seen in quite some time. If this video has been, if you like this video, been of any importance to you, please like it, share some comments.
The number that we've had in our site
it's actually starting to work right now, so we can go back.
We did this analysis a few years ago after the GFC, where we noticed that the period 2007-2009 really closely equated to the major correction that they had in the States in 1919 through to 1921. And so just as a sort of academic exercise, we thought, well, what happens? Where would that go to? And basically, Dow 25,000 was pretty much exactly the number equivalent to where the Dow would have reached in 1929 at the point where it crashed. So Dow 25,000 has always been a number that terrified us. I mean, it doesn't automatically mean anything, obviously, but it's the same point at which, it's the equivalent point at which the Dow crashed in 1929.
Fair to say that all through 2017 you were fairly negative on the direction that these markets have taken.
We were worried that we were getting close to the edge. And so what we were saying was, if you have equities, and we did in a lot of the portfolios, have them fully protected. And so we had an awful lot of protection on the equities, which, it costs money. It costs a couple of percent, say, to go and fully hedge an equity portfolio. But that was because, we had no faith that 25,000 was going to be the number. It could have been 22, it could have been 23, but now we're at 25, which is, to say, the number where history is repeating. That's got us really terrified. So we just think, yes, obviously there's momentum behind the market. There are some justifications, a bit spurious, but there are some justifications for the market still going up. But you really need to be as fully protected now as you possibly can be, because the risk is just exponential.
So there you got it, folks. Be mindful of what the market is. You got some experts saying here, and if it's on CNBC, they kind of give you a warning before it actually occurs. So until my next video, I'm out.